Hello and welcome to FX Street Currency in Play. I'm Matt Brown. I'm joined by Steve Woodcock, who is Head of Risk Management at Terra FX. How are you today, Steve?
I'm very well, Matt. Thank you.
Well, thanks very much for coming on the show. Let's start off by looking at the trends. What's going on in the markets today? Well, we've had a lot of PMI data out, China, Europe and UK. Now, Europe and UK, not as well as expected, but China seems to be performing. But that hasn't really fed through to currencies. We haven't seen really cable or the pound move on it.
I think it's fed through, but it hasn't done anything, has it?
Yeah.
It's. I mean, the market interest in some of these numbers that are coming out now seems minimal. Mm-hmm. I think that just shows where we are in probably the time of year at the moment and what's going on elsewhere geopolitically. So I think that's the reason for that. I think.
Yeah, not really moving the radar.
No.
People looking at bigger issues.
Bigger issues, exactly.
Understood. I've got dollar index near 92.50. We'll come on to Fed. We've got a few Fed speakers later on today, and gold hovering near one-year high on rising North Korean tensions. Now that seems to be the trade, the safe haven currency that is gold. But what about yen? Where's that going?
Yeah, well, could I just with the gold there? I just like you say, we're on a one-year high sort of, but we are at important technical numbers at the moment. This 113 sort of 30 to 40 is on the way down. Did a lot of work here. So I actually do think, we've had the quick pull up last weekend, obviously over Korea, and I said to someone earlier on today, I'll be surprised if we just break this level quite easy. I think we've probably got a pullback back down towards 1300 before it's going to resume any kind of strength. But yeah, it's the gold trade, like you say, after last weekend. I mean, it already had started to get bid. On various other issues, but yeah, obviously it's gained some strength over the last weekend.
Yeah, and we've had a few fund managers on actually talking about gold as the insurance play and moving a bit out of cash into gold because they've still got large equity positions, and the Nasdaq and the equity market seem to be performing well, so they don't want to miss out on any uptick in equities, but they want a little bit of insurance against global political.
Yeah, but I've sat here for the last. I've sat in my office for the last 2 or 3 years while gold has continued to travel lower, with everybody telling me gold's no longer the safe haven it used to be. Now, obviously, because we've had $100 rally in the last whatever it is, all of a sudden, actually, no, yes, gold is the safe haven. It's more due to warring factions, I guess, than political. Instability, I think, but it's strange, isn't it? When the market's going down, everyone's selling it, and when the market's going up, everyone's buying it. That's why I tend to trade in the opposite direction of most people, and or use a different method, if you like.
Understood. True contrarian. So looking at the dollar and euro and dollar yen as well. If we start off with euro dollar, it seems stuck around these levels now and lacking direction. I think a similar thing with dollar yen. What are your views on these two?
Well, like I say, my thoughts are we are eventually going to go to parity in euro dollar, but we can't put a time scale on that. And I think it goes much lower. I think what we're seeing at the moment is, as everyone knows, is a dollar trade. Everyone's selling dollars. It's quite interesting, actually. After last weekend as well, you'd generally come in on the Monday and you'd have bought sort of dollars as the tension accelerated. And but we're not seeing that. We're seeing the like if you say that the safe haven of the yen come into play, even though they've just had a rocket fired over their heads. Which is a strange one for me.
Yes, yeah.
But no, like you say, the euro. It's had its rally off of those, the lows down at 106, when it sat down that way for a long while. And as everyone knows, at them levels, everyone told you it was going to parity. No one was buying it, and you couldn't see a buyer anywhere. Now we're up at these, we've touched 120. Now it's going at 125. Yeah, amazes me. How do these people make money? It does amaze me.
Talking their own book, maybe.
And join the crowd. Just as no one make their own mind up these days. And have something more interesting to say about this stuff, or at least a view that is a little bit different. different than the same old run-of-the-mill, thing that's bought out in these situations. But, we're 119, well, I left the office with 118.80.
Yep.
I've got to admit, European, politicians are telling us that the euro is now too strong.
We'll see that from the ECB potentially on Thursday.
Yeah, verbal intervention we've seen already. I'm presuming we're going to get more. Whether we'll get physical intervention, I very much doubt it, because as we've seen over the last probably 5 to 10 years, it isn't like the old days when we used to have concerted intervention from every central bank that did move the market and put it where they want it. I don't think we're in that situation at the moment. They might watch me now and say we're going to prove him wrong, as if they need to.
So euro-dollar parity, that's a big call, obviously, from these levels. What time frame would you put on that?
Well, for me personally, at the moment, it's a sit and wait and see for the moment. Okay. Yeah, because we're just in that, we're in the dollar trade. Yeah, that's where we are at the moment. Attention has come away from Europe, even though we've got Germany elections coming up very soon. We've still got the inherent problems within the structure of Europe at the moment. But I'd sell the euro all day long. And I think what we're seeing as well with this with the Brexit negotiations and all that sort of thing, we are now starting to see those little niggly comments from European politicians telling us that we are naughty boys and how dare we tell them that we're right and they're wrong, which is why we want to come out, isn't it? And get rid of all that ridiculous school, playground mentality that I've got a bigger stick than you and you do as you're told. So yeah.
There we are. And looking at the calendar for today, we've already touched on it. It's a lot about Fed speak. We've got the factory orders in there sandwiched in at 3 o'clock, but Brainard, Kashkari and Kaplan all speaking today. What can we expect from them? Any kind of market moving, or is it just more of the same?
Yeah, more of the same. Those, the people we've got up there, the markets tend not to take too much notice of them. It's pretty much like me on this channel. Who takes any notice of me?
I'm sure someone might be shorting the euro on the back of your comments.
The factory orders, obviously, we'll be watching that. Because it may add a little bit of fuel to the fire if it comes out wrong. And there could continue in the dollar sell trade. But I've got to admit, I don't like to stand in the front of a steaming train, but the dollar has been being sold now quite aggressively for a while. But if you think we're psychologically 120 euro dollar, we're at good support for dollar yen. 107.50 is ultimately 106.30. Those are the levels. But 108.50, 109 again, good support here. I don't expect dollar yen to drop through here like a stone. So factory orders, we could be seeing a little bit of movement after that. And it's actually quite interesting. The Aussie GDP at 230. I'm watching the Aussie quite a bit at the moment, obviously because commodity prices have all got stronger. Gold, again, doing well, and technically as well, the chart in the Aussie is looking a little better and more constructive than it has done for quite some time. So I'd say that Aussie, obviously it's out of our time scale, but 2:30 in the morning, that's an interesting one.
Yeah, keep an eye on that.
Yeah.
Well, Steve Woodcock, thank you very much for joining us today.